This is Randy Finney with the right side of the chart, and this is a closing market wrap for Thursday, March 19th, 2020. Forgive me, as I said this morning, my days are all off with the schools being shut down, the kids at home, the wife at home. It seems like weekend mode, and it's also been a very long week for me. A very profitable week. It's markets have been super conducive to both active trading and swing trading lately, more like active swing trading, but also day trading. Today was just a really nice day. We had like I put them on again. They're unofficial trades that I posted this morning on all the index ETFs, IWM, SPY, and QQQ. At least those three, or the futures, whatever you like to trade. Then I followed up in the comments section, posted set up on Crude. We had that trade, just had our stop clip for a small loss. I'll get to that. We hit our price target today and it reversed. And just a lot of stuff out there I'm watching. But tomorrow will be the real quadruple witching. I stated it in the post this morning that thought today was Friday, but of course that is tomorrow. And so expect some volatility there. All right, let's talk about what happened and what to expect going forward. Start out here. This is the NQ Nasdaq 100 daily chart, and here's that really nice support zone. Runs from about 6,900-ish to about 7,000 on the upside. That says 6,997.94. So yeah, 6,998. That's 7,000. We'll call it. That's the top of it. The bottom is most important there. And today is day number 5. 5 consecutive days. 1, 2, 3, 4, 5 of successful defenses. Each and every day has tagged the bottom of that zone, and stocks hold up. Now, I'm not going to spin that as anything like super bullish. It's the support level. Market was oversold. It can only go down so far, so long, especially when you have extreme high put interest, put to call ratios, high short interest, and all that. Fundamentals still are awful, and this may be just a bump in the road on the way down. We'll see. Like I said, today, although I kind of engaged the market actively today, showed you a lot of trade ideas. I posted frequent updates on that. More of that's more day trading stuff. I maintain what I've said, especially if you're a new subscriber coming in today. I'm kind of backing off on the swing trade ideas because the risk reward is not attractive for shorting here to the downside. Yes, this support level can break and the next wave down can come. That is certainly a possibility, but the risk of a sharp short covering rally, bear market rally, especially with anything else the government can throw at this market. They're doing everything they can, not just the U.S. All ECBs firing up their bond buying program, all that good stuff. So there may be downside. We milked this run down. We milked the counter trend bounce and the bulk of this down on closing out our official QQQ short trade. Or was it earlier this week or on Friday? And either way, yeah, right at that low there. And we sidestepped this grind and actually profit givebacks on it. So I feel comfortable there as far as swing trades, and that's for the typical swing trader investor coming into the site. Active traders, I'll post all the day trade and active trading setups all day long. Normally on right side of the chart, you don't see trade ideas like I posted today off 30-minute charts that are maybe only good for a 1-day trade or 2-day trades. The typical trades are swing trade investment trades, but we're in a different market. We have to adapt. These little micro trades, even day trades that we had, like IWM up over 10% today from where I posted it this morning. Go back in history, there's 10% is a good year any year in the Russell 2000 small cap index. You get 10% in a day, take the money and run because or welcome to the world of day trading, because in a fast moving market, the premises and the principles and the reasoning and basis behind those trades are exactly the same as it would be if I was swing trading IWM for a couple weeks or even a couple months. Buy at support, look for divergences, then look for breakouts above resistance levels or bullish chart patterns, and go long with stops in place, and sell when your profit targets are hit. And so it's just happening a lot quicker right now. But I just want to point out, bigger picture, that's what's happening. PPO is deeply buried. Looks like it's trying to turn up here, so we still could see a a short covering rally. And what my thoughts are before I get into all the individual charts is tomorrow is, like I said, quadruple witching. You have stock and futures and options, all that good stuff expiring tomorrow. And so what happened, these positions have to be squared away. And with the excessive put buying and short interest in this market recently, I think the potential is there for a potential for a nice potential short covering rally, big pop, more than we had today. Markets closed green today, but it wasn't anything huge. And I just want to share my thoughts. So it could go the other way. Maybe all that position squaring goes to the downside. But what I do on the side, I tell you my opinion where I think things are going. I'll tell you when my convictions are high and when they're not very high. They're decent. I think the risk reward, like I said, is right now in the very near term skewed towards the upside, meaning being long. But you have to manage those trades. Whether you're trading futures, you still run the risk of having locked down or up or down limits, and that 5% lock limit, whether they go up 5% and overnight or down 5%, and then during the regular trading session, those are removed. But you have the circuit breakers in the stock market. So, all right, guys, let's get into the charts. I just wanted to point out that again, five successful or consecutive candles, starting with Friday's candle, holding above that level on NQ. All right, so let's drill down to my favorite swing trading chart right here. The NQ 60-minute chart. I will get to the index ETFs in just a second. Keep repeating. This is just a bang up little trading range right here, offering a lot of ops to go long on the bottom of it, short on the top. That was last posted yesterday. There was our bear trap when we broke down and then recovered. Again, that was highlighted as look if you do break, look for a marginal break. If you get a quick recovery, that should trigger a short covering rally because it's a bear trap, and it did right up to that target that I had laid out in advance when it happened, and that was that intersecting downtrend line in T1 level, which was already hit once, so now hit twice. And then remember, the trend line is very significant, as I said. So at this point in time, the three most significant levels remain as they have for almost last week now. This downtrend line, which again, extra validation today, another reaction off there. That's helps to validate the trend line. Then you still have the key 57 or 75, 57-ish, 58-ish resistance level just overhead. However, if the trend line's taken out with conviction, that'll be bullish. What you can see when you zoom in tight, this wasn't the trend line being taken out. That's a 60-minute intra-candle pop. You never close the 60-minute candle above there. That's what you want to see, a solid impulsive break and or 60-minute close above. So what we saw today was simply another run at the trend line. However, we visited, we visited here. Last time you'd visit it, touch it and then never look back for a while. You'd have the next big leg down. So this is showing the market has some relative strength here. It's holding up. It's found at least a near-term floor. No guarantees that'll hold. And then when you look at all these lines, I'm making a mess, putting a lot of paint on the chart here. But let's just do this. Let's roll back a little bit so we can see the whole trend line there. There it is. It starts off if you want to replicate that, the June or March 4th highs, and that's it right there. And you have the bottom right here, which as I showed you, forms this bullish falling wedge pattern. You can also draw a horizontal line on that 69.47-ish level, and that gives you a descending triangle pattern. So either way, you look for an upside break. Since you have resistance just overhead, you want to give it the benefit of the doubt. You see about 75, 60 get taken out, and that could trigger that short covering rally like I've talked about before, that with a maximum, what I believe to be a maximum bounce target right now of about 83 or so on actually I'm looking at that Fibonacci retracement underneath. Let me put a line there because that blue line's a Fibonacci 38.2% Fibonacci retracement level, which I actually need to move because I had the bottom of the fib set at these reaction lows, and we had this one the other day. So let me redraw those real quick. Oh, here, I can show you if you use Interactive Brokers how to do that. Just right click, remove all, where to go, remove all Fibonacci lines. Why is it not there? I must be clicking on the horizontal line so I can come up to any of the Fib lines like this because I have a horizontal price line there. Remove all Fibonacci lines and then add them back by drawing on that lowest level right here. This is where so far the drop off the highs. This is the all-time high right over here on the very left of the chart. So there's your fibs I just put up now. T1 you can see comes in with that 23.6% Fibonacci retracement level. That moves this line up a little bit there. You can see that is, sorry guys, this pop-up box is getting annoying here, but you can see the 38.2% retracement. That's that blue line. Price resistance there at T3 about 80.83. Again, that would be the maximum target. There's a 50% fib right there. All right, so that's where we're at. Can go either way. As I like to say, you know, resistance is resistance until unless taken out. So far right now, this is the big level to watch. Overnight session. You have a little potential uptrend line forming here off the lows right there as I draw it up here. You know, that could spark a sell-off if taken out, but anything right now in between here is, I like to call it noise. Nothing technically significant. I mentioned that earlier in the video today into a comment section. All these rips and dips, don't read too much of them. The futures tanked last night. I had a few comments. Randy, what do you think of that? It's just what's the norm lately, you know, just like the rallies off the bottom is what the market's doing. This is where the sellers are coming in and selling. This is where the buyers are stepping in and defending. Until that we get a resolution, you know, of this trading range, that's what's going on here. And then there's little micro levels within, like I said, that trend line, and of course this downtrend line. So enough on that. Let's now talk about the index ETFs, QQQ. This is what happened today. I did give you guys, as requested, fired off just a couple charts and a few lines of what's going on before the close. You know, I had earlier today, I said, look, I had favored because SPY was, that's showing the after-hour trades. Let's turn those off and you'll get rid of that wonky little candle right there. Let's go to pre-post data and say never, and we get rid of that wonky candlestick. So this is how we closed right here. You know, we were so close. I was leaning towards a little more upside. Like I said, very close, but not there to that T1 / downtrend line. They came in around the same level, 250.51, and that would have, if it would have happened, it would have popped QQQ a little bit above that trend line. But as I always say, whatever index you're trading, watch them both. What happened is this trend line on QQQ and NQ, as I just showed you earlier, was very formidable. It is and was still is a formidable trend line, and but there's one thing so far that's a little bit different about this today, and that's what keeps me looking for, you know, leaning towards more upside tomorrow. Okay, so what's different about it so far? I think I might have mentioned that on the NQ chart. Last time, yes, I did. You kissed it, that was it. Kissed it, and that was it. Kissed it, and that was it. So far, we hit it here, and we kind of hung here all day. We didn't have that sharp reversal like we did before. The other times you can see them very clearly in NQ as I zoom in. You know what happened every other time you hit it. You didn't have a long time, that is, to decide what you want to do once that level was hit. You had to have your sell limit orders in place, reverse from long to short if that's what you like to do as an active trader. And so far today, you know, we did reverse off the trend line right here, and it was a late day dump, but we haven't seen this follow through impulsive selling yet like we did these other times. So we'll see what happens. If we hold up here, we're about in the middle of the range, a little to the higher end. We could challenge it and even pop it tomorrow or tonight. So here's a scenario I'm going to lay out for you and watch these futures overnight. If you do pop it, that's going to, what it will do is cause a gap up in QQQ. By pop it, I mean take that level out with conviction overnight, and then QQQ could gap up above this level. And in doing so, it would trap a lot of shorts. And again, you know, you got to be quick. If you're trading this rally and you hit that T2 or whatever you're targeting, don't stay too late to the party. You can either trail stops up if QQQ continues to move up. And look, I'm telling you where I think things might be going, but this is still an ugly chart, and the fundamentals, I'm telling you, just gives me a lot of I keep second guessing what I'm seeing in these charts because the fundamental landscape is so poor. But again, I'm looking at short-term supply demand dynamics within the stock market. Like I said, like the high put call ratios, short interest that may trigger some more upside here till all that's kind of cleaned out, or at least alleviated somewhat. PPO is still bearish territory. You guys know I like to use that as a trend indicator. I'm going to roll back here. This is a 60-minute chart, and we're going to look at this PPO. See all this? The prices are so compressed, but there was your all-time high, strong rally in the stock market. And I talk about how this is a really nice trend indicator. I like to use the 9 EMA, which is a signal line. It's the white dotted line here, dash line. And when it's above the signal line, I'm sorry, the zero line right there in the middle, this line, the trend is bullish, as it was there. We had a little correction here. Told you the near-term trend was bearish on this 60-minute chart. And then we crossed again. I told you it was bullish right up to the all-time highs. Crossed down here and put the cues on a sell signal and have been on. We had one little whipsaw where it crossed there. Not for very long, and it went back negative, and we're still clearly down below there. So like I said, the trend is bearish without really any buy signals yet. But on the flip side, we have this we could have a buy signal here soon if we pop that trend line with conviction, at least a near-term buy signal, and we take out that 185.46 level. So that's that. IWM, great day. I told you guys the other day that there was, IWM was setting up to have some more upside potential than anything else. It was poised to outperform, I think is what I said. And it has. This morning I posted it right here on this S1 support level. You can see here, this was a chart posted this morning. We were down at 96.41, right on support. That's an objective entry. Support defined by all these candles here. IWM forming this low, and had us going up here to at least that trend line, and sure enough, that's what we did. So from there, that was I believe better than a 10% rally, and that's what I'm talking about. A single. A day trade, if you will, putting, without even using leverage, getting a quick 10% pop there. And it took out the trend line. I told you in the update today, when I did update that post right there, that I believe I said, we could get a little pullback there. There it is. You can see on the chart. Pull back to come in and back test the trend line. And then if we can hold support and that trend line axis, we have a successful defense on the back test, then it can run up there. I also gave you this level for those of you trading IWM, want to keep your stops tight, protect profits. I said you could have a stop loss order just below there. So lots of ways to trade it. All of this will be continued tomorrow, but you can see that is exactly what happened so far. Boom, there's the pullback. Back test of the trend line. That's just showing after hours trade, that wonky candle. But and here's that uptrend line, if you will, right there on the I think I might have had it on a 30-minute or a 60-minute. I'm on a 30-minute right now. Here's a 60-minute, and boom, there it is. Yep, that's the one I showed you earlier right there, 60-minute chart. It's actually closed right about on it. We're still on that trend line there. And the back test then must have occurred in the after-hour session on this chart right here. Okay, let's talk crude oil. Underneath this post earlier today, this was the first of two videos today, or at least two. Well, this will be the third. Stock market analysis and trade ideas posted around 11 o'clock. I came in here and mentioned that USO was looking good for another. We had that. Official trade yesterday, kept stops very tight on it intentionally, but looked even better today and had us going up here. We were at 504 at the time, instead going up that 559 target, and sure enough, that was hit. I posted an update there. Boom, 559 hit to the button. We were, what did I say, 504 earlier, and that one's played out nice. So there was, if I can find it here. Yep, there it is. So we're at 504, just over that last stop right there. And so that was good for about a 13% rally from just where it was posted there. And again, if you kept this on your radar, I told you yesterday when I put that on, we had potential divergence. It wasn't confirmed. It was confirmed later today. So there's positive divergence. And so that was a quick get out trade. Very obvious target. Like I said, a gap like that is a well-watched. This is just a takeaway. If you're new to trading investing, traders love gaps. They'll trade around them. This is what I call momentum fueled overshoot. We overshot it briefly, so that's where I close and reverse. I have my sell limit order on crude futures there. I'll show you crude futures for you CL traders. Same story. I gave you the I posted this one earlier today as well when we were right here back testing the we just broken out above the 24.22 level. Price resistance there. Here's that chart from earlier. So two buy signals, if you will, short-term buy signals. Downtrend line was taken out, pop, and then this one's probably even more important because we had a lot of reactions. Boom, boom, boom. See crude trying to push against 24.22. Finally popped it and went up this high. And then what I pointed out here, and that's what I said, we were back testing. So and go long there, an objective long entry with a stop somewhat below for a swing trade up to 27.59, and that's that chart I just showed you, the updated one. That's exactly what was hit, and you got to move quick in this market. Everyone's going to take profits at these obvious targets. So just the easiest way to trade is I love, and I always talk about the benefits of OCO orders. OCO means one cancels the other. I can't draw here. This is just a line tool. But OCO, or sometimes brokers will call them OCA, one cancels another, one cancels the other. And what you do is when you go long, you set one order, a stop loss order, wherever you want your stop. You set your second order as a sell limit order at your price target. Every broker does it differently, so I can't go through that exactly how to do it. Just contact your broker or just search their website for OCO, OCA, or the full term that I just said, one cancels another. It's usually under their conditional or advanced orders. And what'll happen is set it, forget it. So if you work, you like to come in throughout the day, get these trade ideas, but you can't sit and watch the screen. It's easy. And not only that, what I love about OCOs, it gives traders that one thing that where most people fail as a trader. They might have good charting skills, able to recognize patterns, resistance, support levels, bullish and bearish setups, but where they fail is that discipline. They get into something and it goes up, they start second guessing and continue to try to hold out beyond their profit target, or maybe they get spooked and sell early, or they let a loser run, they don't use stops, or an OCO takes away that because you put in immediately your stop and your price target. You set them good to cancel, so they will stay on there as long as your trade lasts, and you walk away and let the charts do the work. Stick to your trading plan unless something else comes up that makes you compelling enough to change it. So that would have, like I said, fired off, got you out before the reversal because it was swift once that target was hit. And a lot of profit taking there kicked in at that level. So that was another one today. And look, and it could have more. It might with the market rallying. I always say it's the initial tag of a resistance level that where a reaction's likely, and that's the reaction. So we already had it. Now if we pull back here, maybe another objective entry if we get that low, but we could power up and break on through there and run up to this next target. This one happened right away. I doubt it. That's a big run, but we already had a huge run today in crude. Still up, with that give back, it's still up 24% on the day right now. Okay, let's look at Treasury bonds. Treasury bonds is ZB. If you recall yesterday, and recently I've highlighted this trend line. I first had way back here a minimum target of this trend line when we were way up here. And I emphasized that was a couple weeks back, a minimum pullback target to there. And I talked about some of these horizontal support levels along here, as well as this trend line. In fact, let's just look at yesterday's video. This is the video from yesterday where I said, let me play. So here are the arrows I drew. Boom. One more, boom, hit that support line, that trend line, and then boom, reversal. Okay, so that's what I was talking over myself there again. That was from the video. So what I'd said is, expect a more upside in the market, and that would cause more downside in Treasuries, which it did. Now I went away from the live chart. ZB right here. So with the market rallying today, that took Treasuries down, and look at that. That's a perfect kiss of that trend line. That trend line has not been touched in a while. See, it's a well-defined trend line, comes in, boom, first reaction, and then a bounce. And that bounce went right back to this 173, 159 resistance. A little bit of a momentum field overshoot. I'm still, that would have been a nice trade. I could have been in that, instead, along with being long, but it would have been pretty much a concurrent or an overlapping trade to being long equities today. I could have been short treasuries profiting from that, but that trade was highly contingent on the stock market going up. So again, I focused on the equity markets, but maybe some of you guys caught that, able to swing that down or reverse there today. And that did, remember, we did peak later in the session, and we've dropped, and we've been dropping since in the futures. So that could be it, for the bounce in the stock market. I want to make that very clear. I could see the potential for a short squeeze tomorrow, but man, I would not bet it hard because, like I said, the fundamental backdrop is just awful. So if you're going to bet it, just keep it light. No reason to, try to, swing for the fences right now, because if these things move against you, especially if you're trading index ETFs, the futures do a big reversal overnight, you can wake up to a very painful and large gap against your position. So it's actually impossible to manage using ETFs in this market. Okay, and a quick update on gold, and I think I'll wrap it up here. We're just, like I said, focused on a few things at this point in time, just kind of the big stuff: Treasury bonds, crude oil, stock market. Gold's back down to that support level, which was a basis for adding it long the other day. This is a GC daily chart, 1 year of gold futures. Symbol GC 1459 is very well-defined support. So we're back there again, and like I said, we have a cross current. So we had divergent highs, some bearish technicals. We did have a trend line that got shot through, although there was never really a reaction here. So you only had 1, 2. I'm not putting a very high weighting on that trend line. Put a higher weighting on this support shelf right here. So that's it. If it goes much lower, we may be stopped out on that trade, but I'm still liking it for now. What's putting pressure on gold, as I mentioned, is the shortage of U.S. dollars right now, which has caused a sharp climb in the dollar, which is bearish, a net bearish effect for gold. But if we get a little reprieve from the rally in the dollar, and also forced margin call selling. I have little doubt that's a big part of what's going on in the stock market lately. A lot of forced selling of stocks and things like gold. So I still like gold. I just want to say that. It's here at support. If I liked it the other day at that level, I still like it now. And like I said, let me look at the official trade, because I might not have had an alert set. Sometimes I get these trades out. I try to set price alerts to make sure. Maybe we were stopped out. I don't know. I have to look at that right now. No, we're well off the stop. All right, we had there's that 136.37 support right there, which I mentioned. You can see, gold futures are closer to that same support level, comparable level. Here's our stop, and there's another support zone there. Like I said, if gold does go down more, I'll revisit it for another long if and when it gets to this level. But as of now, I like it, and let's just leave it on. We don't have many active official trades because, again, this is more of a swing trade. This, like everything I posted today, this morning on those 30-minute charts of the indexes and 60-minute charts of the futures and crude oil and all that. Those were trades that really were day trades today, because those targets, the minimum targets, were hit. There's some additional targets, so they could morph into swing trades if you took those positions home. And I'll update it tomorrow. Like I said, the key is don't fall in love with any positions, long or short, in this market, because this market will at some point disappoint you severely. Just stay safe, keep your position sizes light, or stay out of the market, like I said, and watch and learn right now. Learn from my mistakes, learn from the successes of the trades on the site, and other traders too. There's been a lot of great contributions on the site. Things are going fundamental, people posting charts. I really appreciate that. doing my best to keep up, and I'm really behind on questions, chart opinions. I'll try my best to get to those when I can. Like I said, this week was really took a big setback trying to migrate the website up to a faster, more efficient, powerful server, which we ran into some tech issues that I had to work with the developers to fix. But we have those ironed out now, so I'll turn my focus back to the charts. One more day to trade this week. And if anything really big happens overnight in the futures or tomorrow morning, I'll post some updates. Otherwise, as I said, prepare to strap in and hold on for quadruple witching tomorrow, and just watch those levels that I've showed you, and those will hopefully be the guide to where the next near-term move in the market is. This has been Randy Finney with Right Side of the Chart. Have a great evening.